Everyone, welcome to this evening's session of Hotel Ownership Unplugged. Appreciate you guys checking in with us tonight. So we're going to talk today about how to choose a hotel management company. It's a topic that I think a lot of people either don't know about or they don't, in my opinion, obviously I'm biased, but they don't spend enough time thinking through. So um, I'm going to give you a quick intro as to who I am, and we'll get going. So change the slide here. Yeah, so here I'm Tommy Byer. I've been in the industry for about 18 years now. Got experience. Let's see. I started out working literally parking people's cars. So I was a valet at a Four Diamond Resort in Charleston, South Carolina, and went to school at University of South Carolina for hotel management. While I was in school, actually, I helped open up Hilton Garden Inn with the management company that I was working for at that time. And then I left to become a general manager of a couple different hotels. So I went down to Savannah. I was a general manager of one property and then two properties. And then eventually I left to go work for a hotel management company. So I consider myself something of an expert in the field. I worked for a hotel management company for about 16 years. And I started out in their corporate office as a director of financial analysis. So I would do all the budgeting, pro formas, any kind of ad hoc reporting, all of that kind of stuff. So I did that for a few years. And then I moved on to a regional VP of operations. So if you don't know what that role is somebody who oversees a portfolio of hotels for a management company. So, as we talk a little bit more today, we'll kind of explain some of the roles in a management company and that kind of thing. But really, what we want you guys to be able to determine by the end of the call is how to choose the right company, because buying a hotel is a big decision. It's a huge financial commitment. It can be a big time commitment, and it's a big decision you've got to make. So who's operating is important. And if you've been around Devon's webinars in the past, you'll hear her say, there's three important things when it comes to choosing a hotel, right? You've got to make sure you're buying in the right location. You've got to make sure you've got the right brand, and you've got to make sure you've got the right operator. So tonight we're focusing on operator. So, all right, enough of that. Let's go back to me real quick, and I'll finish up my intro. So, when I was a VP of operations, I oversaw about 15 hotels at one time. And when you're working with a management company, they're going to have an assigned operations. They may call them a regional or a regional VP of ops, or there's a couple different names for them. But that person will be assigned to your hotel, and they're going to be holding the property accountable and helping the property do better. So they'll be working directly with the general manager and the property team. So again, I oversaw a portfolio of about 15 hotels at my peak. And then I left that and went on to work in business development. So I was focused on growing the company. I grew it about 40% in 2 years, and then decided it was time to kind of see the hospitality world from the other side of the table, meaning working with ownership and kind of having a piece of equity. So as I sit right now, I own my own asset management company called B Hospitality Advisors, and I help people I consult on new projects. So if people are looking to do pro formas or find deals maybe you found a deal that you need help underwriting, so I can help you with the pro forma. I can help with lender presentations, management company selections, which we're going to talk about tonight. I can help with franchise negotiations, selecting the right brands, and then ultimately asset manage the property as well. So I have a few clients, Devon being one of them, that I asset manage their hotels. And if you don't know what an asset manager is, it's somebody that really responsible for helping improve every aspect of the hotel, right? They're overseeing the asset. In this case, the asset being the hotel. So An asset manager, you might hear called an owner's rep in some cases, right? So a person who sits in this role is responsible for helping drive top line revenue, helping improve the expenses, helping make sure the asset is in the best shape possible, that the property is in good standing with the brand, good standing with the lender. Maybe they'll help with some investor reporting. So it's kind of a catch-all position at times. But the nice part about the role is that let's say you're not familiar with hotels, you're trying to learn a little bit more. It would make sense, in my opinion, again, I'm biased, I'm going to admit that, but it would make sense to hire somebody who knows a lot about the business to come in and help you operate your property. Some of my clients know a lot about the industry. They just don't have time. They don't have time to sit in on a revenue management call. They don't have time to talk to the brand or talk to the general manager or talk to the management company. So they rely on me to do that and then to report back to them. So that's a little bit about me. You can see here in some of the notes, I've underwritten about $6 billion in deals. I've published a few different books, a bunch of industry articles, won all kinds of awards from General Manager of the Year to national awards in the hospitality industry. So I'm not a big fan of promoting myself, but I've definitely been in the industry for a long time. Um, if it revolves around working in a hotel or underwriting the deal or acquiring a deal, I've been there, done that, seen a lot. I'm not going to say I've seen everything because every day in this industry is a little bit different, but I have a unique lens because if I'm working with the general manager, I can clearly say to them, "Hey, I've been in your shoes. I know what you're dealing with. This is how I would handle it, or this is how I've handled something like that in the past." So I can bring value that way. So, and as it relates to working with owners, I've worked with owners who have publicly traded real estate investment trusts that are worth billions of dollars. And then I have other owners who are brand new to the industry and are just trying to learn and they're working on their first hotel deal. So I can kind of work with anybody in between. So let's get to the subject of what you want to hear about tonight. So again, we're going to leave time at the end for Q&A, and as always, appreciate you guys jumping in. And I should kind of point out a couple things. This hotel, let's start from the beginning. I kind of like to give you some history on some of these hotels. I don't know what the Kinley is, but what this it reminds me of is a cool soft branded hotel. And if you're not familiar with soft branded properties, you may or may not have stayed in some, but think about like Autograph with Marriott or Curio with Hilton or Tapestry with Hilton. Those are soft branded properties, and I think those are, we're getting off topic a little bit, but I think those are kind of cool, trendy properties, but I think they're here to stay. So, as you guys are looking at hotel deals, soft brand kind of brings the feel of an independent hotel, but you've got the power of a brand behind you. So, this hotel actually here is in Cabo. I think it's a beautiful property, really well located. I've actually underwritten this deal with a different client. It's an independent hotel there. And then this one is another, this is called I think it's the Cumberland House. It's in Knoxville, Tennessee. It's Tapestry. It's a soft brand by Hilton. So I didn't just pull like random stock photos. I wanted you guys to know that. All right. So what's a management company? So, and throw in the chat where you guys are coming in from tonight. Again, I appreciate you guys making time to jump in. So, what is a management company? A management company is a company that you would hire to operate your hotel, right? And you might say, well, what do you mean by operate? Like, what do they actually do? So they are actually going to do everything from accounting. So they should be doing like your profit and loss statements. They should be doing like sales tax, managing like balance sheets, taking care of AP. So anything like accounting wise, think they're going to do that for you. It should be almost A to Z. Anything that involves operating that hotel, they're going to take care of for you. 9 times out of 10, they're the employer, right? So if you hire them, they're the employer of record. They're the ones that are cutting the checks to pay for the employees on site, right? if you don't want to be super involved with it, you don't have to be very involved with the hotel, right? That can be up to you as the owner. Some owners are in their hotels daily, even if they have a management company. Some owners go to them once every other year, right? So it varies. It depends on what you'd like to see. Okay, what else does a manager? Yeah, I appreciate you guys coming in. So we got Atlanta, DMV area, Akron. So I'm in Williamsburg, Virginia. So I'm not too far from the DMV for sure. Actually, I'm going to be in DC on Thursday. Houston, you guys got some tough weather down there. Hopefully, if things are clearing up. So, um, San Antonio, cool. All right, so what else does a management company do? They usually do revenue management for your hotel. And if you're not familiar with revenue management is a service to where they're having weekly or biweekly calls, usually about an hour long, and they're going to review all the rates that your property is charging and the inventory that's available and sales and a bunch of other things. Um, there should be responsible for so they're going to be responsible for driving your revenue, hiring your employees, managing your expenses, producing your P&Ls, making sure your property is in good standing with the brand. So if you have a branded property, they're going to be making sure you're passing all your brand inspections and keeping good guest satisfaction scores. So a management company does a lot, right? And they're a super important part of a successful operation. A management company can literally be the difference between your property returning strong returns to you and your investors, or to you losing your flag, or to the lender coming after you personally. Let's say you signed a recourse loan, right? Recourse meaning the bank has the availability to come after you personally for the loan you signed. And if that management company is not doing a good job of operating your hotel and you're not making your debt service, in that hotel, that you have to hand the keys back to the lender, right? And I'm painting you guys best and worst case scenarios, right? But this is the reality of it. Is every management company good? No. Are all management companies bad? No, right? There's, just like every industry, there are good management companies, there are bad management companies. There are some management companies that are good, they're just not good for specific assets, right? So it's actually a super important topic that I don't think enough people are talking about, and especially if you're just getting into hotels. So let's say, let me ask you guys this: does anybody out there own a hotel right now? And if you don't, does anybody have a couple deals they're working on? Kind of let me know in the chat where you guys are at, so that'll help me out with the conversation a little bit. But let's just, for argument's sake, as an example, say you're completely new, you're trying to buy your first hotel deal, you're underwriting the asset, maybe you've put in an LOI, right? A lot of people don't think through, well, who's going to operate it, right? So the question is, like, why do you need one? Like, so you say, okay, Tommy, why do I even need a management company? We've already talked about all that they do. So you might say, I want to do all that myself, right? Because there are people like that. They're control freaks. They say, I don't trust anybody. I want to do it myself, right? So that may be fine. You might say, okay, I think I can do it myself. So let's say again, you're going to write an LOI. You're going to buy a Hampton Inn, right, which is a Hilton property. So Hilton, being the franchisor or the parent brand, will say, "That's nice. I'm going to pick on somebody. That's nice, Trudy. I'm glad that you're buying this hotel and you think you could run it. Well, tell me what you know about hotels." And I'm picking on Trudy. I don't know anything about Trudy, but Trudy might say, well, I've got the money, but I've never worked in a hotel. I don't know anything about hotels. And that's when Hilton comes and says, wait a minute, you have to have a management company. So they'll do what's called a management company stipulation, right? So what they're going to say is, you've got to go choose a qualified management company to run this hotel for you. And the reason the brands do this is they're trying to protect the brand standards, right? So that when you go stay at one Hampton Inn, and that's just an example, when you go stay at one Hampton Inn, your experience there ought to be pretty similar to the next Hampton Inn and the next one and the next one, right? So that's why the brands do that, right? Because they know that a qualified management company has people with years and decades of experience, like I used to work for a management company, who can oversee your property and make sure that it's going to be run in a manner that complies with their standards, right? And the brand actually is looking out for you in that case because you have a better chance of having a successful business and successful hotel investment if you have a management company helping you at least initially than you would if you just decided to do it on your own. And you might say, how do I know? Well, I've run into owners who said I was going to run it myself, and I convinced the brand, and the brand allowed me, and now I'm failing my inspections. My revenues are low. I'm not performing well against the competition. My expenses are too high. Help me, help me, Tommy, help me. And I'm saying, all right, guys, if you learn anything tonight, call somebody like me or Devon or any, qualified asset manager or consultant to help you initially in that journey rather than go through all those pain, right? People say, like, oh, you learn most from failing, and that's true, but man, that can be a pretty expensive lesson when you're talking about investing hundreds of thousands, if not millions of dollars into a property, right? So okay, so one thing is the management company can make that stipulation. Excuse me, the brand can make the stipulation that you have to hire a management company. So let's continue down that road. Let's say the brand says, yes, okay, I think maybe you know what you're doing, maybe you're super convincing, and you convince the brand. The next person that's going to have something to say about it, if you go get a loan on your property, if you got to go get a mortgage, the lender can make that stipulation. So the lender can say, I'm not willing to lend you money unless you have a management company. Because the lender, again, they're trying to protect themselves. The lender's responsibility is to mitigate as much risk as they can as a bank, right? Because they're trying to protect it. They want to make sure they've lent the money to somebody who's secure and it's a secure investment, right? So the lender can make that stipulation, and you have to hire a management company. So those are a couple reasons. Another reason, that it kind of is unsaid, but I think it's out there, is that let's say a lot of you guys are new to owning a hotel, right? So you're probably going to have to go get some investors, right? So think about this. You're talking to potential investors, and what if one of your investors says, or potential investors says, well, who's going to run this thing for you? And you go, I am. And they say, oh, that's good. What do you know about hotels? Well, I attended Tommy's webinar. Well, that's nice, but that doesn't get you very far, right? So you want to be able to go to the investor and say, you know what? I've partnered with XYZ management company. This is their experience. I've met with them. I've done my due diligence. And this is who's going to be operating. And this is also the portfolio of hotels that they operate, right? So it gives you more credibility when you're going out and you're raising capital, right? The other thing you can do with a management company is you can talk to the business development people at that management company or any of their executives, and oftentimes they can connect you to deals that you may not be aware of, right? So they'll go put you in touch with the deal because their whole goal is for them to manage. That's how they're making their money. And we'll get into that in a little bit in terms of how they make their money and what fees they charge and that kind of thing, because that's a whole long list of questions. Um, okay, we've talked about what's a management company, why do you need one, what's an operator? So it's a trick question, right? An operator, you might hear people call management companies operators. It's the same thing, right? An operator is a hotel management company. So those are interchangeable, right? So at least I see your questions. That's a good one. I'm going to get to some of these at the end, but just keep them coming, guys, because we'll make sure we leave time at the end for all the questions. All right, so how many management companies are out there, right? I mean, there's at least, I've seen lists of maybe 200 or so. And just to give you an idea, kind of the biggest one out there has about 1,300 hotels. Their name is Aimbridge. And then the smallest, so if you're going like number 1 to 200, the smallest one's probably going to have, 2 hotels or something. I guess technically you could have one hotel and still be a management company, but I don't really think that's much of a business, but but it could be. Um, so more of your medium-sized companies are kind of in that, call it 75 to 40, or maybe 50 to 30 range, something like that. Your larger companies are anything kind of 100 plus. And when we think about, I'm just giving you guys an idea of scale. When you think about Aimbridge being number one at 1,300, there's a couple that are at maybe like one or two that are at 400 or 500, and the rest kind of drop down into the 200s, which is still a lot of hotels. But if you think about the number of hotels in the country, I mean, you're talking about like, I don't know what it is. It's like 30,000 or something crazy. So, or maybe it's more than that. I should know that number off the top of my head, but there's a lot of hotels in the country. So not every hotel has a management company, right? There's a lot of owner operators out there. To be an owner operator, though, you either have to have a lot of experience when you're talking about a branded hotel, or you have to be kind of in a lesser brand, let's say, or just not a premium brand, right? So that's the difference. Or it's an independent hotels, right? So it's Jolis's Inn and Suites or something, right? So there's no brand that says you can't run that. Again, keep in mind that lender can still say you need somebody to run it. And sometimes when they make that stipulation, it's usually only for a period of time. So they might say, Hilton or Marriott might say, you only need this management company for 2 years. At the end of the 2 years, we're going to evaluate what you've learned. Maybe you've decided you want to add on some people to your team and you want to run it yourself. And if the hotel is doing well, maybe they'll allow that, right? You can go through the process of becoming an approved hotel operator for different brands. Now, some brands are really difficult, right? Marriott, to go through that process with Marriott is super difficult. It's not impossible, but it's very difficult, and it's expensive. So there's, again, how many? There's a couple hundred. How many good ones are there? I don't know. I haven't really gone through the list, but I'd probably say at least 40% of those are probably reputable company. Maybe 50% of them are reputable to this point of I'd be okay hiring them. Um, Maybe that list. I'm pretty picky, so it might be lower than that. All right, so let's talk about due diligence, right? What kind of DD should I do? The due diligence. And this is probably where we're going to camp out for a little while and kind of sit here and talk through this, because again, people don't really do their proper due diligence. Let's skip down real quick and think through, how do you find the list? So you say, that's great, Tommy. How do I even find it? Yes, you can Google it. You can find, hotel management companies in Texas or whatever, and that list will pop up. A couple other ways you can find it. One, there's like a hotel management magazine or a lodging magazine that every year they put out a list of, the top companies. And those are free. You can find those online too. You can also talk to the brand. So you'll have a franchise representative with your brand, a franchise like development person. They're going to give you a list. Now that list is probably going to be pretty condensed. It's going to be 3, 4, 5 companies. Now, keep in mind, so many people make this mistake. So many people just take that list and say, okay, I got to pick one of these, right? It's not that way. You can look beyond that list. Now, the brand has to approve this XYZ management company to run your hotel. Yes. But the brand has approved a lot of different companies. And again, let's just stick with Hilton, right? Hilton has approved a lot of management companies to run. Outside of that list they're going to give you. Now, I don't mean to say that the list is not accurate. My point is, you don't want to be bound by some list of 5 or 6 companies to choose from, right? You want to be able to make sure that you go outside of that. Who knows why they gave you those 5? Maybe they gave it to you because of your location, the type of property, the type of owner they think you're going to be. Maybe somebody on the list says, sends them a Rolex every Christmas. I don't know. Maybe that's happened. Maybe it hasn't happened. I have no idea. the point is, because I don't create the list, the point is you want to make sure you go outside of that list, right? Um, so that's one thing. So go outside of the list. Look for different companies, right? You can talk to the broker on the deal you're working with. They can make an introduction. I can make an introduction. Davon can make introductions. We've worked with these companies. I've got connections to, probably a dozen or so management companies right off the bat that I would recommend, depending on the location and depending on a bunch of other things. All right, so that's how you can find a list, right, of what companies to go with. Now, question is the due diligence, right? So now let's say you found, six or something like that, and now you're going to start the interview process. So this is what you should do, right? So you're gonna interview them. You're gonna talk to the initial contact is probably their business development person. So kind of like their salespeople, those business development people are going to be the ones to tell you all about the company and to tell you why you should choose them. They're going to take you to the nice dinners and pay for tickets to football games, whatever. That's their job, right? That they're trying to grow their business. So it's good to meet with them. And what I always tell people, and I wrote Devon and I wrote a little ebook about this too, is how to hire a management company. But I always tell people, like, get past those people, move on to the next person, right? Because what I mean by that is, and remember I told you guys I was a VP of operations and I oversaw 15 hotels. I was interfacing with those owners. When I was in business development, I wasn't interfacing with the owners once I got the deal. I got that deal and I moved on to the next person I was trying to convince to come to the company. That's nothing wrong with that. That's just how the business operates, right? You want to talk to the people who are going to be in charge of your hotel on a day-to-day basis, whether that's operations or sales or revenue management. Those are the people you want to talk to, right? So don't fall in love with the business development guy or gal and never think through uh, who's going to actually operate, because maybe you don't like that person, maybe you don't get a good feeling from that person, but that's the one you're going to be talking to, right? So think through that. Make sure you're moving on to the next person on that list. So, what other due diligence did you do? You need to make sure, like when we think about criteria about who you should hire, a management company doesn't necessarily have to be based in whatever city your hotel is. So let's just say I'm using Atlanta because somebody said Atlanta. Let's just say your hotel is in Atlanta. The management company you choose doesn't have to be based in Atlanta. If they were, that's nice. Yes. But what they do have to do is they have to have experience with that market for sure. That's a prerequisite, and experience with the brand, right? So if they don't have that, then you should run away, move on to the next company, go down that list of 200, find somebody else. And the reason is you don't want to pay for them to learn on your property, right? They shouldn't be learning the brand or they shouldn't be learning the market on your hotel. You want somebody who says, oh yeah, I know Atlanta. We operate 3 hotels in Atlanta, or we used to operate one there about a year ago, and we know contacts with this company and Coca-Cola and Spellman and Morehouse and whoever else, Georgia Southern, all this stuff, right? We know all these people. We can get you business. Boom, boom, boom. You want that, and they might say, oh yeah, and we know a good general manager. They're in that market now. They'd come back to work for us. These are the reasons why you'd want to hire a management company either based nearby or certainly with experience in that market, right? The same with the brand. Maybe you're, let's just for argument's sake say um, you're buying Holiday Inn Express, okay? That's part of IHG. It's Intercontinental Hotels Group. Maybe the management company you're interviewing has only had experience with Choice Hotels and they've never worked with IHG. Well, you don't want to hire them because they've got to go learn all the new systems. They've got to go learn all the new intricacies. They've got to make contacts with the IHG brand. You want somebody who says, oh yeah, I've worked with IHG for 10, 20 years. We know their systems. I know who to call if I've got a problem, right? I mean, all this makes sense, but these are things that people don't really think about when they're interviewing, and it's not their fault. They just don't know, right? So you want to make sure, again, experience in the market, experience with the brand are helpful. You also want to make sure that they know the type of hotel you're operating or you're trying to buy, right? So let's say you're gonna buy a Candlewood Suites, right? Candlewood is more of an economy extended stay product, right? And maybe this major company you're looking at only runs big box full service hotels, so big Hiltons or big Marriotts or resort properties or whatever. And you said, man, I really like these people, and I want them to run my Candlewood. Well, it's not a good fit because they don't understand what it takes and how to properly operate a hotel that's much smaller, that has limited staffing, that needs super long extended stay business. They're not used to that, right? And it's nothing wrong with them. It just means they're not the right fit. Move on and find another company who's a better fit, right? So again, experience in the market, experience with the brand is super helpful, right? So, what other due diligence? So, when you're talking to the management companies, they should be willing to give you a list of all the owners that they're working with and as references. And again, don't settle for this list of 3 people. I want the list, man. Give me, if you have 50 hotels you're operating, give me 50. I want to be able to call any of those 50 because if they give you the list and Cynthia is mad. Well, Cynthia's not on that list. And Shirley's mad. Well, Shirley's not on that list. But Stephanie's happy and Tamika's happy. Oh, so they're on that list. And you call and you say, hey, Tamika, how is XYZ Management Company? Oh, they're great. Of course. But you didn't call Cynthia, who's mad, who says, hey, they didn't hit budget for the last 2 years and I'm getting ready to fire them. Or they're doing so bad with their brand inspections that I'm about to lose my flag, right? So you need the whole list of all the owners and all their contact information. Do you have to call all of them? No. But can you call a handful? Sure, right? So you want to ask for that. You want to ask for their track record, right? They should be able to clearly tell you how they're performing from a number of perspectives. One, how are they doing against all the other properties that they're in their market. So in hotels, there's something called a star report. And that star report compares your hotel's performance to your competitors. And these management companies track all the hotels they have and they track all their star performance. So they should be able to give you an average, not only of that year, but of the last 3, 4, 5 years that says, hey, if you hire us, you don't have to worry about your performance against your competition because we exceed it by XYZ margin. And they should be touting that. If they're not touting that off the bat, then they're probably not doing a good job there, right? Because if they're doing good, well, they're going to say, oh, hey, look, by the way, you should hire us because you're going to do so much better and blah, blah, blah. They should be able to tell you how well they're doing on their guest service scores. Again, if you're buying a branded hotel, right, the hotels get surveys. You guys have all stayed at hotels. You get a survey. They say, Trudy, how was your stay at this hotel? Rate it from 1 to 10, right? And then the brands average all their hotels, and then you have your average, and then you can compare the two, right? So these management companies know those scores, and they can tell you what their hotel's average versus the brand average. You should be able to ask for that. They should tell you that. You should ask them how their quality assurance scores are. Quality assurance is when the brand sends an inspector, like an internal audit, to the hotel unannounced usually, and they go in and inspect it once or twice a year, and they get kind of a report card. You should be able to say, hey, how are you guys doing on those QAs? And they should be able to spit out some kind of data that you can look at, right? And the management companies probably aren't happy that I'm giving you all this inside info, except the good ones won't care because they're already doing well and they're happy to give you this kind of information. Another thing you should ask the management company to give you a pro forma. So you should be doing your own pro forma, so you can present to your investors and the lenders and so on and so forth. The broker's probably doing a pro forma. You can take that one, ball it up, and throw it in the trash. To all my broker friends, I'm just kidding, except usually they're not worth the paper they're written on. And then the management company will give you one, right? And you don't want to treat the management company's pro forma as gospel, but what you want to do is just have it as a point of reference. And then all the while you're doing your due diligence, and I did this for a client not too long ago, is I created a matrix. And the matrix was essentially just a simple Excel spreadsheet, but it listed things like the different fees these management companies are charging, the terms, blah, 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 blah. So I had a really easy way for me to compare the management companies kind of side by side, right? So you should be able to do that, and then just kind of create like a pros and cons. I like this about them, I don't like this about them, right? That kind of stuff. So that's some of the due diligence. I want to leave time for Q&A, so I'm going to move on. There's more due diligence, but again, we have it in the book, and you can schedule one-on-ones and all that stuff with Devon or myself. Happy to run you through it. But we've talked about finding a list. Yes, there are some better companies than others, and what makes them better, right? So they're better because they're going to perform. They're going to outperform their competitors, and you should, in the end of the day, you should have a property that scores better on guest service, drives more revenue, drives more profit, and ultimately delivers a performance that you can be proud of as an owner. So one thing I think that gets overlooked is every owner is different, right? Jolise is different than Shirley and Trudy and Cynthia. They're Joyce. They're all different. Everybody's different, right? And I'm different as an owner. And what I mean by different is you have a different style. You have different goals, right? Everybody wants to make money, sure. But the way you make money and what you're willing to kind of sacrifice and what's important to you as an owner is going to be different. Everybody's going to be different. Maybe I care more about culture and guest service, and I'm willing to give up a little bit on profitability. And I'm using it as an example. This may not be true. Then the next person. The next person may say, you know what? I don't care if I have 5 general managers turned over per year, as long as my bottom line is, 5 points higher than I perform it. Whatever. I don't care if I'm willing to kind of cut every expense I can to drive the profit margin. And there are owners like that. Again, to each his own. I don't agree with that, but that's all right if that's how you want to be. So if that's how you are, let's just say you're so laser focused on profit to where you don't care as much, not to say you don't care at all, but you don't care as much about kind of the soft stuff, right? Hey, I got to know my general manager, or maybe he or she or I guess she had a baby or whatever, and I want to give them a nice gift, right? Maybe you don't care about that as an owner. You're like, you know what? It is what it is. I'm here to make money. Then find a management company that aligns with that. Because if you're an owner that all you care about is bottom line, and you're with and you choose a management company that really is big into culture and how long their people have stayed with them and all that, all of a sudden you guys aren't meshing. That's not going to work out. And it's not going to work because that management company is not focused on the same things you are. And you're going to constantly ask for them to focus on that, and they're not going to be focused on it. So you're going to be going like this or just kind of butting heads a lot, right? So on the other end of that, if you really care about culture, you want to take care of your team, yes, and you believe that if you take care of your team, it's going to drive better revenues, and as a result, you'll drive better profits, blah, blah, blah. You kind of believe in this holistic approach, then find a company that agrees with that approach, right? So, that's another thing that you should think about when you're interviewing these companies. Okay, so let's talk about it. Let's talk about money. Who likes money? Anybody like money? Anybody want to make more money? Everybody? Bueller? All right, how do they charge you? So they're not doing all this stuff for free, right? Management companies need to make money. So they're charging you in a number of different ways. One, a base management fee. And usually that's like, call it 2.5 to 3.5% of your gross revenue, your top line revenue, right? So if your hotel did, let's use easy math. Your hotel did $3 million in revenue, and they're charging 3% management fee. How much did they make in base fees? Somebody do the math. No calculator. You can do this in your head. $3 million and a 3% fee. Shout it out. Somebody give me a number. It's easy. I know we're 7:45 at night, but somebody
A
can do.
hundred thousand dollars, maybe. I don't
Well,
know.
at least says about 100,000. 3 million and times 3%.
Nine,
What is it?
nine.
It's they got 90. I'm saving everybody. You're close. Three times three, they got $90,000, right? So that's their base management fee. Okay. What other fees are they charging? There's something called, you might hear it called an IMF. It's an incentive management fee. And the incentive management fee is usually kind of like a bonus. It's like, okay, as a management company, they did a pretty good job. We're going to give them more than the base management fee. And the incentive fee can be determined by a bunch of different ways, right? But what it usually is there's kind of some benchmark it's tied to profit. So let's just say, and it's usually tied to your gross operating profit, not usually your net operating income. It can be net operating income, but usually it's gross profit. And the reason is management companies don't have a lot of control over property taxes and insurance. But we're getting deep into the weeds here. So, all right, incentive management fee. What you say is, all right, Mr. or Mrs. Management Company, XYZ, give me a budget for my hotel. How much money are you projecting me to make in 2024? And they're going to say, okay, maybe you can make $1 million in gross profit. Okay. The incentive fee will say anything above that $1 million, we're going to give the management company a percentage of, like maybe 10%. Okay. So if they do $1 million, 1.1 million, so they do $100,000 over that $1 million budget, then you're going to give them 10,000, right? Because it's 10% of the $100,000 difference. You get it? Um, and then that's a way for you as an owner to make sure a couple of things. One, that they're not only focused on the top line revenue, but they're focused on your profit, because you got to make sure this hotel is profitable. You got to pay your investors, you got to pay the lender, you got to pay your property taxes, you got to pay all these things, right? So if you don't give them that incentive and you only give them base fees, they could do really good at making top line revenue and not do anything with your expenses. And all of a sudden, they've done well and you haven't paid your bills, right? So those are some of the fees. The other two fees, right, that you see are pretty common are accounting fees. So they're going to charge you to do your P&L and all that stuff that we talked about earlier. And it varies. It varies by the size of your hotel, by the complexity of the property. But you can expect to pay somewhere between $1,000 and $2,000 per month for your accounting fees. And then they're going to charge you a revenue management fee. We talked about a little bit about what revenue management was, but they're going to charge you again somewhere between 1,000 and 2,000 per month. The more complicated the hotel, the more they're going to charge you. The easier, more simpler the property is, the less least they'll charge you. Um, and if you don't have the hotel management company to do your revenue management, you're going to have to go hire somebody else and you'll pay them anyways, because the brands are going to require you to have somebody do revenue management. So those are some of the main fees. They'll usually charge you kind of some payroll fees, but that's going to be kind of a pass-through expense. The other kind of pro tip, insider tip here is to ask the management fee for any pass-through fees. And you might say, what's pass through, right? Pass through is things that the management company is going to charge you for as an owner, but they didn't really list that, right? So they're going to give you a management agreement and there's going to be fees that they're not listing. And those fees, I'll give you an example. Usually management companies have their own internal conference. They take all their general managers and directors of sales somewhere, and they take them somewhere in the country and they go through all this training, and they go out to dinner and so on and so forth. And it's usually a 2 or 3 day conference. Well, they're going to charge you for that, right? But they didn't tell you that up front unless you ask the right questions. And there's nothing wrong with these pass-through fees. You just need to know what they are. You want to make sure these are transparent, right? I've had some owners that say, I don't want any pass-through. I don't care about that. I'll pay you half a point more on a management fee. Just don't charge me that. And the reason they do that is because they need predictability. They don't like the kind of gray area of, I don't really know what I'm going to be charged this month from this management company. So you have to be careful. The reputable ones who are ethical and honest, they're going to charge you only the things that you should be charged for. The ones that kind of smell out that maybe you're new to the industry, they might try and sneak some stuff past you that you shouldn't be paying for, right? I've seen management companies charge owners for things that they should not be paying for, even though contractually that owner signed it. The owner signed a bad management agreement. I'd argue that management company should never have done that because that's not ethical. However, some owners don't know any better. They didn't go out and talk to somebody like me. They didn't sit through like a webinar like this, so they don't know. You guys are smarter than those owners, right? Because you've taken the time to sit through this and you're taking notes. You're paying attention. I know it. Even if the kids are screaming and the pot on the stove is overflowing, I get it. I have kids too. All right, real quick, let's leave some time for Q&A. Let's talk about the agreements. A management company is going to usually try and get you to sign an agreement for, at a minimum, 2 years, sometimes up to 5, maybe 10. 10 is kind of crazy, but usually a 2-year agreement, right? And that's okay because what they're all going to tell you is year one, we don't make any money because we put so much effort into your property. Year two is where we start to become profitable. Um, maybe that's true, maybe that's not. It's hard to prove out, but they're going to want to have at least a 2-year agreement. They do have some costs associated with transition and that kind of thing as well. So it's about a 2-year agreement. One thing that, again, a lot of people who are new mess up on and don't and overlook is you're going to want to have what's called a performance clause in there. And the performance clause gives you some protection as an owner. What it does is it gives you a way to hold that company accountable. And there's all kinds of different ways you can structure that. But a couple of ways, real quick, is you would structure it to say, hey, XYZ company, if you fail 2 of those brand inspections in a row for these reasons, I can fire you. I can fire you before the agreement says I can fire you, before the agreement ends, right? And there could be all kinds of other little hurdles in there. Maybe you have what's called like a loan that has a DSCR in it, a debt service coverage ratio. So maybe the lender says you have to cover your debt service at a ratio of like a 1.5. So you might go to the management company and say, hey, look, if your performance falls below this 1.50 ratio that the lender set, I can fire you, right? And you're just trying to protect yourself as an owner, because otherwise the agreement should not be one-sided. It should be in favor of both parties. Or as one person I talked to at one point said, you have a good agreement when both parties are a little bit pissed off. So you give a little bit here, you get a little bit there. You should come to some kind of an agreement. So look, I know it's super dry material. I know, some people are falling asleep on their keyboards. I appreciate you guys checking in. So I want to leave time for Q&A. I think I've covered a lot about management companies, and you have to stop me because I can go on for hours and hours and hours and never get bored of talking about it. But so let's see. Let's type. Don't feel shy. Throw in all your questions. It doesn't necessarily have to be about management companies. So it looks like some of you guys are just starting out. Some here are beginners. Looks like some people own part of a deal already. So that's cool. Some have worked for the brand. That's awesome. So Jaleese's question was, where do you find potential investors, and should we start raising capital before finding an investor? So, the question of where do you find potential investors, right? And it's honestly, you'll honestly be surprised when you start going out there, right? So if you start talking to kind of like friends and family, a lot of people, some people call it like a country club raise, but let's say you don't go to a country club and you go to church. Maybe you're talking to the folks at church and say, hey, like, oh yeah, by the way, I'm starting to invest in hotels. I'm thinking about buying a deal. You take somebody out to lunch and maybe they say, oh yeah, you know what? I've got $50,000, I've got $25,000 or $100,000 sitting around. I'd be willing to give you that. So that's called like a soft commitment. Um, so that's one way, right? It's really your network. Maybe it's coworkers, friends, family, that kind of thing. Um, and the other place, and Devon, was shooting me if I didn't talk about it, but she obviously has the Vestor platform, which is a crowdfunding platform, which I think is a great platform because it allows people to go in and invest directly around to that website. They can learn about your deal. You can do a video, and you tap into that Vestor network. So just like you guys are attending this, she would also help promote the deal a little bit, but it's mainly all that's on you. But you can go onto Facebook and tag investor and all that kind of stuff. And again, it gives you that platform. So it, in my mind, it gives you a little more credibility too, because if you're talking to an investor and they want to give you $50,000, it's a little easier to say, yeah, go to this vestor.com. There's my deal. Everything is kind of escrowed at whatever this agent is, and it feels a little more secure, and people are a little more comfortable with that than just writing you a check, right? So that's kind of how you would usually, that's how most people find investors. But there's also Facebook groups, there's the Vestor Academy, there's all kinds of other Facebook groups online, there's hotel owner groups, there's a million different ways you can go out and network and just kind of put it out there that, hey, I'm looking at a deal, or maybe you found a deal, right? Because some people say, well, I want to raise money, and then people say, okay, well, what kind of deal are you trying to buy, or tell me about a deal that you have, and then you don't want to be stumped by that, so you want to make sure you're spending time, with somebody like me or Devon who can kind of help you get prepared for that. It's not something that I would just kind of run out there with and throw out. I would make sure that I've thoroughly thought through my acquisition criteria, and I know how to underwrite a deal, or I've partnered with somebody like me who can help you underwrite the deal, or you're working with brokers and you've really kind of taken some time, to kind of think through these things before you go out raising capital. So it's a good question. Trudy, thank you. I'm glad you enjoyed it. So Shirley, here you're saying as a new investor or owner, when do you start working with a consultant? Yeah, it's a good question. And to tag on to that, you said, are there consultants out here to help you analyze a potential deal? Yes, so for sure, I do that. I can help you analyze deals. Devon does not like to do that. She can do that. It's just not what she loves to do. I love to analyze deals. I can certainly help you with that. And there's no right or wrong answer to when should you get involved with a consultant, right? I mean, you can think through it a couple of different ways. One, you could do some like some coursework and get involved in, like Devon and I have some masterminds, or we'll take you guys through like kind of an 8-week course that helps you get started and learn everything from how to raise capital, how to pitch a deal, how to find a deal, how to analyze a deal. We've got all that. And then we also have, so you could go through a course like that kind of speeds you through the process. Or, you can schedule like a one-on-one with consultants. You look, all this stuff costs money, so you have to be cognizant of that, right? And there's also free information like we're providing today. So I wouldn't say you'd want to. I mean, some people have said to me, "Hey, I want to schedule weekly calls with you over the next, 12 weeks or whatever. I want to pick your brain. I just want to pay for 1 hour sessions, whatever. That's fine too." Like I said, there's no right or wrong answer to that. I would say, if I were in your shoes, it sort of depends on how far along you are into it, or how serious you are about it, and that kind of thing too. So, yeah, I'll put my contact information in the chat for you guys. Hold on. And here's my cell. So what other questions are out there? Again, appreciate you guys hanging out, and happy to spend some time chatting with you. Um, as you're doing your initial analysis on a deal, we've got some like a quick analyzer that can help you with that. So that way you don't have to, kind of do a full blown pro forma. I like to do the full blown pro formas, but I just love analyzing deals. So but you want to, like I said, with everybody, like you want to get your reps, right? You want to take the time to just get more and more comfortable with looking at different deals. What makes this a better deal than the other deal? What makes this market better than the other market? Why is this brand? The more questions you ask, the better you're going to be. Some of my best clients are the ones that ask really good questions, right? And you want to ask not just one question, ask the question behind that one, right? So if you're talking to a broker, right, here's some examples. So many people just say, well, how much is the deal? And they tell you, and then they just listen to the broker talk. But how often are we saying, why are they selling the deal? And then really thinking through that, or how much capital have they put into this project, and just boom, you should have a list of maybe 20 questions that you can start kind of peppering and throwing out there, making sure that they're answering, so that you've got all this backup. When you're speaking to brokers, and then you can use that data, synthesize it, turn it into your pro forma or your analysis, and then you can determine if this is a good or a bad deal. um, so anybody have any other questions tonight for me? Um, as always, appreciate you guys taking the time to drop in. My information's in the chat there. You can find me online, bhospitalityadvisors.com. And good luck in your journey, and good luck choosing the right management company. If you need help, I'm here for you. And I hope you guys have a good rest of the week. Take care.